How to handle losses like a successful trader. Stay tuned, we're going to talk about that next. G'day traders, today we're going to talk about how to handle losses like a successful trader. And what that means is how to learn to lose like a pro. I read a story by a trader who sat next to Luke Donald, who was a professional golfer. Now, many of you may not be familiar with the name Luke Donald, but he was several times as a professional, only a few strokes out of the lead, but never really won any major tournaments. And this gentleman talked about Luke Donald and talking to him, and Luke Donald, he was the gentleman in question that was talking to him was really impressed because Luke Donald said that he was a better golfer than Tiger Woods. But the difference was that Tiger Woods' mental preparation was by far exceeded all the other golfers. But the one thing that he said that separated Tiger Woods apart, aside from his obviously fantastic ability to play the game, was the fact that he could finish a hole, poorly played hole, to shockingly played hole, and go to the next hole like nothing had happened and move on. And that's how you need to be with trading, because you're going to take losing trades. And Curtis Faith, who was one of the turtles, sums it up perfectly. Good trading is not about being right. If you want to be successful, you need to think of the long run and ignore the outcome of individual trades. Now, this was my downfall in the past. I probably had a winning trade success rate of 60 to 70%. Or greater on some of my trades. But I would blow up an account on one or two trades. So I would go along for 2 to 3 weeks or months and grow that account. And then I would let a small loss turn into a huge loss by averaging into losing trades, moving my stops, taking on more leverage than I was capable of, fighting the trend. And I could not accept taking the loss. And one of the major turning points in my trading came when I finally accepted that every single trade, I have no outcome to that trade, but what I needed to really focus on was executing my trading system, sticking to my money management rules, and managing that trade as effectively as possible, which meant every order, whether that was an entry order, a limit order, or a stop loss order, is just that. They're just an order. And the outcome of that individual trade was not going to impact my account or my future trading. So a lot of times as traders, we have a vision of what we want to be doing. We want trading as a vehicle to get there. And every time there's a losing trade, we see that as a failure between us achieving our goals. And so we fight that because we're conditioned to believe that we need to have a high success rate. Everything that you do in your schooling and your learning is always about a high percentage, achieving the highest amount of information right. And trading doesn't work that way. You can have a less than 50% win rate if your profitability on those trades is asymmetrically skewed in the reward favor. A lot of new traders, they really have a hard time taking losses, and they're searching for the entry exit holy grail. Their emphasis should be on risk management, taking as small as loss as possible. Now, a lot of traders will also get beat up. They'll take a lot of small losses. They lose their confidence, and they get a small winner, and they take it off the table right away. And that trade continues to go on and become profitable. I know I've been guilty of that, and I still sometimes, I fight that, but I put my orders in and I walk away from the screen, which I talked about the other day because I was up 100 and something pips twice in 1 week. By the time I got up in the morning, I'd been stopped out at break even. They didn't hit my profit targets. Whereas I was in another trade where I was down 70 pips on the Monday, and when I got up in the morning, it was back to break even. It didn't hit my stop loss. So sometimes that can work in your favor, but ultimately in the long run, in order for you to be successful, you need to be able to take the losses. That's where your emphasis needs to be, taking small losses, as small as possible. As small as your system identifies as where that trade would be wrong, take the loss, and your money management and position sizing needs to reflect that also. So some of the things that you need to do to work on improving the ability to take a loss like a professional, have positive beliefs. You need to focus on understanding that taking that small loss is a great thing. Jesse Livermore said it best. Taking a loss never bothered him. It was sitting on a loss and letting it grow and letting it eat away at his psychological capital that destroyed him. And so even when it grew into a bigger loss, when he took that loss, it was relief. It was over. There was no more draining of that capital. He had a flat disposition to the market, and he was able to look for new opportunities. Keeping things into perspective. I remember years ago, trader, an American gentleman, came to Australia. He lives here now. He was in Wall Street for 40 years, and he talked about some of his friends committing suicide in the 1987 crash. So one of the things he talked about was keeping everything in perspective. Trading is just a vehicle. It's part of what you do, but it is not the be-all, end-all. So when you take your trades, it needs to be reflected in that. If you want to try and blow yourself up on the next trade, most likely you will. So keep it in perspective. Be focused on progress. Keep your mindset emotionally oriented on a reasonable expectation. Learn from your losers, move on. What could you have done better? What did you do right? Was your preparation correct? Was it part of your trading system? Did you execute your money management appropriately? Were your orders according to your trading plan? All the things that you can do to learn from that. You've had a losing trade. Now learn from it and do it better next time. Journaling and have external accountability. So I'm using the Edgewonk software. And one of the things that I'm hoping to see is, obviously, as I get my data entered into that, which I'm still learning to do, is am I in tilt? Am I following my trading plan? Even though I might be I have a positive trade expectancy, am I really following that accurately? Am I going into trades and having a lot of heat against my position? So I'm looking at how to monitor that over a larger data sample to see how accurately my actual execution, analytics and execution of my trading is reflected in the metrics. So also having an external accountability partner or source somebody can review what you're doing to be able to tap you on the shoulder and say, hey, look, you might be doing well in the P&L department, but you're actually not following your plan. Or keep it up, you're doing great work. I'll talk to you next month or next week, whatever that is. Somebody that you can count on that's going to be honest with you, but also mentally now you've got somebody that you need to be showing your results to. Number 5, don't let a losing trade make you become I am a loser. So if you let that go into a huge loss or take a destructive effect on your psychological capital or your trading account, that's going to be very devastating. Take the small loss, move on. So number 6. Post-loss ritual, what can we do? Well, it's the area formula. So you want to acknowledge the losing trade. Okay, you had a loss, learn from it, move on. We talked about that in the previous step. Release it and let it go. So that could be a little affirmation, a visualization exercise, or picture yourself just letting that go, taking that negative energy and releasing it and moving on. Imprint yourself for the next trade. Visualize the same type of trade. How could you have done that better? Or how could you have traded that differently? One of the things that I always ask myself before I take a trade is, if I'm going to go long, for example, why would somebody else want to be looking at this and wanting to short that market? In Forex, there's always going to be somebody else taking the other side of the trade. Why would somebody else want to be taking the opposite side to the position that I'm about to take? Looking at that, visualizing how that other trade went, how could you have done it better? Imprinting that and then doing it better the next time. And then affirming that. So again, have an affirmation, whatever they are for you. I am a rock in a sea of chaos. So when the market's volatile, you've got your trading plan, you're sticking to what you've got your preparation and your methodology in place. You're focusing on your breathing. I always manage my risk. I'm a rock in a sea of chaos. Whatever affirmations you need to do to keep you focused and reaffirm sticking to your highest type A winning trade setups. So learn to lose like a professional. That's what separates losing traders from highly successful winning traders, is being a great loser. The better loser you become, the more likely you're going to succeed and be very profitable over the longer term with trading. Stay disciplined, traders. Stay focused. Have a great trading week, and may the markets go with you. Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.